Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Fed Day. It's Wednesday, June 15th, and we got quite a bit on the plan, so we'll jump right into it. But first, we'll start with this bottom one here I put down here. I should have put this on top, but it's the FOMC. They wrap up their two-day meeting by 11 o'clock Pacific Standard Time, 2 o'clock East Coast. Janet Yellen will be giving the announcement and their decision on what the if there's any rate hikes and what their meeting entailed. So we'll get their information coming out. And they're going to be looking for any, especially on the dot plot, that's going to be the most important item on the docket today from them, would be they want to see if and when the next possibility for a rate hike. And some analysts are thinking if there is to be one, then the soonest will probably be September when that might happen. If not, maybe as late as December. So those are kind of the 2 months, but they want to kind of see what the dot plot, especially after the bad jobs numbers we received. Before that, they were very hawkish, and then they had the bad jobs number, and then they've kind of seemed to tone it down a little bit about rate hikes. So they're going to be really looking for that. Now, to the top here, we got the Producer Price Index. This is the wholesale inflationary gauge here. So we got 0.2% back in April increase, and forecast for May was at 0.3%. It came in at 0.4%. So pretty healthy. Year over year, we're actually below 1%. I think it was like 0.8% if I saw correctly. Producer Price Index. This is more of a medium term. We're more concerned about what the inflation for consumers, like our PCE and our CPI numbers, than Producer Price Index. But it does kind of give us this little insight as to if the CPI or PCE might go up a little bit. Empire State Index, we have, this is manufacturing in the New York region, and we saw back in May contraction at 9, and then forecast we thought it would continue at it would continue at -5, and it came up. Actually, we expanded at 6, so this on the gauge here. So anything below 0, of course, is contraction. Anything above is expansion. So we actually had a little bit of good news here from the Empire State Index. Industrial production, same thing, or actually no, the opposite, excuse me. We had a 0.6% back in April, and it contracted and came in at forecast at negative 0.4% here. And then capacity utilization also went the other way for the month of May. So April we had a 75.3, forecast was supposed to be at 75.1, and it came in only at 74.9, so it dropped 0.4% here in the month of May. And then we've also covered the FOMC. The stock market is up. There's taken a little bit of a rally on the cusp of the announcement from the FOMC. Of course, after their announcement, we could have some volatility between the bond and the stock market here. We've already mentioned the FOMC. Brexit concerns continue. So after today, you'll probably hear more and more about Brexit, which is basically the vote in the referendum about possibility of England moving away from the European community. The polls are showing that it's so close that it could go either way. So this is what's creating a little bit more anxiety with investors. Right now we got the Fed today, and then after that you'll see more talk about the referendum coming up on June 23rd, which will be next week. Here's the bond market. As you see, we had a pretty big lot of volatility. We were trying to break above this resistance level here, and we were even touching off the 25 as well as the 10-day moving average here. And now we're just resting above the 10-day moving average. We started off the day just above the 10-day moving average, and now we're trying to go up against this resistance here. So right now we're about 3 basis points from where we left off yesterday. It's going to be a little bit mixed, primarily because there are some price changes. So depending on where they did the price change, some people may not do a price change. If they didn't do a price change, there probably won't be any difference in our pricing. If they did a price change for the worse yesterday, as we dropped down here, it's possible that they could have we may have an improvement in those pricings. As you can see, we were up a bit more. It would be over 12 basis points in that terms. All right, folks, we're going to try to keep this short. Sorry for kind of a long, delayed one here. Hope you guys have a great rest of your day here, and we'll see you guys tomorrow. Thanks for watching. Bye-bye.